All right, and we're live. Welcome, everyone. Saturday, May 20, I believe. No, I got the date wrong. It's May 30. Can you hear me, Luke?
Mm-hmm. Got you loud and clear.
Welcome, everyone, to another edition of Weekly Crypto Update together with BlockchainSpace and Fortifex. I'm glad to have you here again, Luke. How are things in Australia?
Cold, dude. It's getting cold down here. But can't complain. These things happen to the best of us. So, yeah, no, it's been not too bad. Thankfully, we've been, for better or worse, we've been one of the more spared countries from the corona drama. So things are starting to open up here, but still kind of irrelevant because, it's kind of irrelevant because there's not much to do. It's getting into winter, so there's no beaches, there's no exciting stuff like that. It's just chilling out at home, doing what you normally do. So yeah, no major updates here other than the temperatures dropping. That's about it.
Right. And for those who have usually tuned in on a Saturday with us, you're going to actually notice that this is probably the first time you've seen Luke's face live.
Yes, so, finally got my stuff together.
Congrats on your new webcam.
Only took a few months. Well, it's the really annoying semi-perfectionist in me, and that I didn't want to use like my webcam from like my shitty webcam that comes with my laptop or anything like that. I wanted something that was halfway decent, and so yeah, I basically had to fork out a bit of cash to get this one. And as everyone knows, everybody in the world is working from home almost. So there's been a bit of a short supply of these things. It's been a bit of a short supply of this stuff over the past couple of months. So yeah, we're currently dealing with that. So yeah, finally came in. And I think if people remember the first time we did this, I've got a brand spanking new microphone that sounds amazing as opposed to the one that I was originally using. And now I'm all the gear and no idea. So it's all good.
Well, we're going to have to fill the next hour with something. And
I don't think that'll be a problem. Going on historical performance, I think we'll be right.
Yeah, the next episode, I'm going to have to crack open the beers as well.
Oh, mate, you need something. You need something.
Yeah. Right. So again, for those who are tuning in for the first time, let's do a quick round of intros. So my name is Peter Ng. I'm the founder of BlockchainSpace. It's an education hub for blockchain and crypto in the Philippines. We've been doing meetups, seminars, these kind of talks since 2018. So just a couple of years, but we've been pretty active in the community, and our aim of the game is basically to get more people educated and to share kind of what are the projects happening in the space so that you can navigate the space safely. We are actually running together with Luke and together with Bitcoin Malaysia, a Bitcoin for Beginners program every week. That's like a private seminar. And we highly encourage the people that are new in the space, come and join us, come learn about it for the first time. And for those who have been in the space before, share it to your friends, get more people into the space so that they get in the know. Luke, you want to do your own intro?
Yeah, I guess a bit of background about me for those who don't know. I've been involved in crypto since late 2016. When I was doing my MBA was when I first heard about it. And I think what got me into it is the first person that told me about it gave me such a terrible explanation of how blockchain works and what Bitcoin was that I was like, all right, I have to have a look into this for myself. And at the time I was working on a piece of software that would enable people to trade, trying to eliminate the emotional side of trading. I come from a trading background. And my co-founder was like, dude, why don't we stop doing this, worrying about retirees and all that kind of stuff. And why don't we, we're too young and stupid to be involved in that stuff anyway, like self-managed super funds and 401ks and all that. Let's get into crypto. And so I've been involved pretty much full-time in the space, let's say 2017, 18, 19, and 20. So it's been a while. Involved in the ups and downs and sideways movements of this space for a while. But we operate essentially a portfolio management system for cryptocurrency users that enables you to, without any risk at all to yourself, as in from a hacking perspective, get visual oversight over your wallets and exchanges in one location. So, for example, one of the biggest problems that I had when I first started was, and I don't think this is something that everybody would face now, but, I had like 30, 40 coins, tokens and stuff rattling around in 2017. And, even when I wanted to sell some of them, I'd have no idea where they were located, because I had like 6 exchanges, a bunch of different wallets. Then, as we all know, like, when you have things like EOS, where it's an ERC20 token, then it converts to its own blockchain. It's like, how do you track that? And that's what we hope. That's what we are trying to help our users to do, is to help them track their crypto as well as value it. So that's Fortifex. But I'm sure there'll be links and stuff in this below anyway. So that's what I've been up to. And then now, with COVID, as Peter said, we're running these courses that are designed to, I wouldn't really call them courses. I'd call them more introductory services that are designed to help you build the right habits early and get yourself up the right way, right the first time. And this is to eliminate the risk of you being scammed, hacked, or a lot of the other ways that people lose money. I'd probably say, and this is anecdotal, so don't look at it as a statistic, but I'd probably say that particularly in Southeast Asia, I would say more people have lost money to scams, not knowing what they're doing, doing stupid things like, believing that someone, if you give them some Bitcoin, that they're going to give you 5 Bitcoin a week for the rest of your life, or something ridiculous like that, like Ponzi schemes. I'd probably say more people have been ripped off by that kind of stuff than they have out of buying and buying high and selling low and losing money through standard investing. So what the aim of that course is designed to do is get you set up right, give you enough fundamental knowledge so that you'll be able to determine what is legit and what isn't, and make smarter investment decisions moving forward. That's pretty much it. A nice, easy one-dayer. But yeah, that's what we've been working on. I'm sure you know, Peter, but for anyone who didn't know, that's what we're working on. It's so far it's been pretty good. We've got really, really good feedback. If you want more information, I guess you can ask Peter or something about that after we do this talk today.
Yeah, definitely.
That's all from me.
Yeah, thanks, Luke. Yeah, we'll definitely drop some links in there. We'll drop some contact details in case you guys want to get in touch. We'll also, I was just discussing with Luke earlier that we'd love to get some other people featured here. So if you're tuning in for the first time and you want to get featured on the stream, get in touch with us. Leave a comment even. That's even better. A nice way to interact. So for the coming, let's say around 45 minutes, so we try and keep this always within an hour and try not to take too much of your time on a Saturday. But in just within an hour, we're going to address a couple of things. So the first is I'll give a couple of updates from the Philippines, and we'll try and keep this lighthearted and easy for people to understand, so it's not too technical. And then Luke is actually going to be talking about the Goldman Sachs report, which was a big topic for this week in crypto, and their take on Bitcoin. Don't know what that sound means.
It's not as bad. I mean, I got to say that I'm more annoyed at the people who are reporting on it than I am about the report itself. Right. It's more that I'll talk about it anyway. Keep going.
Sure thing. Okay, so. Without further ado, I'm going to add my slides here, and then I'm going to go into full screen. So, Luke, you're still on, so feel free to jump in and comment. And I'm going to try and go full screen here on the PowerPoint.
Sure thing.
All right, let's see if that's working. Can you see my PowerPoint full screen?
Yep.
You can. Awesome. Okay. Right. Starting off on a very light-hearted news update. So from the Philippines, we have the exciting announcement today from the presidential spokesperson, Harry Roque, sorry, and he updated us today that barbershops are now open. So barbershops are going to be giving haircuts, but not to get too excited. You cannot get facials and you cannot get eyebrow plucking. So yeah, not to get too excited.
Too risky at this point.
So and also the barbershops that will be open actually are only in the areas of GCQ. And for those that don't know, so in the Philippines we have certain levels of quarantine. So we have like modified enhanced quarantine areas, like community quarantine areas, and then we have general community quarantine areas. And so the more relaxed places, the places where we have less density of cases, they tend to have kind of like more shops open. But in general, where I'm based in the CBD, you're going to see basically there have been more shops open, but honestly, not that much more foot traffic. So so these businesses are still going to struggle for a while. And for those who haven't actually transitioned online, it's definitely going to be an uphill battle. All right, now moving on to something a little bit more serious, but still kind of should be fun. So actually a good colleague of mine from Emphasis Consulting, who does, she runs a column basically for CoinDesk. And she wrote a piece about Facebook's Libra and how it can actually be applicable for the Philippines. And actually, I was actually taken back by this piece. I thought it was really well written. And for those of you that aren't too familiar, Libra actually re-released another paper, and a lot of people actually didn't read it, including myself. So it was great actually to read someone else's summary. But basically, for those who didn't reread it, they just didn't expect any more further updates since Libra got basically knocked back quite a bit by a lot of the regulators. And then also for those who have read it, apparently their take on it was that it's no more than the next PayPal. However, in this article, and I think it's worth you guys reading it, Leah talks about basically Facebook and those that are part of the alliance of Libra to address basically the 1.7 billion people that are unbanked in the world using a basket of fiat-backed stablecoins. Now, this is kind of interesting for kind of two audiences, and I think the first is really the central banks who basically aren't in a position to basically create kind of stable coins, their own stable coins, like what we call central bank distributed coins or CBDCs, right? And then secondly, it's more for kind of like the general retail public and especially the unbanked. And so the Philippines is really interesting in terms of demographic. And just some of the stats that they kind of pointed out here was only 22.6% of adults actually have a bank account in the Philippines. So this is going to be interesting for people kind of outside of the Philippines that want to understand the market a little bit better and the potential for fintech to actually have some impact here. And then obviously there is a huge population here that just have mobile phones. So it's actually the number of people that actually own mobile phones, or the number of mobile phones out there in circulation, is over 109 million. So it's actually greater than the population of the Philippines. And of which these mobile phone users, 2/3 of these guys are actually on Facebook. So that's super interesting. And Philippines is actually known to be probably one of the most social media heavy users actually in the world. I think that it says in the article 5 years running, they've been using social media the most, and they have a tendency to spend around 4 hours on social media per day, versus the global average, which is 2 hours 24 minutes. And then finally, there's currently right now the majority of purchases actually for retail in the Philippines actually cash based. And so actually you're going to find more than 90% of retail transactions being cash based. And for those who tuned in last week, you know that the governor of the BSP actually announced last week that he wants to see, I think, around 50% of retail transactions become digital by 2023. So there's going to be a lot of interesting stuff happening in the next coming years. And obviously, COVID is definitely going to push this forward. Right. And I'm going to leave you this one quote that's pretty interesting, that's cited in the article, is they want to make Libra as easy to send money to the Philippines as it is to send a photo via Facebook Messenger. And if you can imagine how simple that would be, I mean, that would just be huge, right? So not saying it's going to be an easy feat, but this is definitely something to keep an eye on. Then on completely the opposite side of the adoption side, right? So the other kind of article that was published about the Philippines in kind of mainstream crypto news outlets was about crypto being used by terrorists. So actually the Philippine Institute for Peace, Violence and Terrorism Research, so the PIPVTR, reveals that terrorist groups related to Islamic states in Southeast Asia have recently made their first transactions using crypto. So I mean, I think this is something that's definitely worth raising. It's always been a discussion point that crypto might be used for illicit activities, and that's pretty much how it started, with the Silk Road. But at the same time, there is actually a counter report and a counter article from Chainalysis, so the guys that actually do kind of due diligence on transactions happening on chain, right? And these guys they published a very lengthy report, which I was just going through before we jumped on, debunking numerous stories about terrorist groups using crypto. And actually, they were saying most terrorism financing campaigns have raised less than $10,000 indicating limited adoption. And then they said further, if terrorist groups like ISIS had funneled oil proceeds into Bitcoin, you would have seen significant trading volume on regional exchanges increase, and you'd be able to monitor this basically through the exchanges and the regulation that's already been set up. But it's certainly an interesting point. Luke, any thoughts on this? Or even any thoughts on Facebook Libra?
I mean, yeah, wait and see. I mean, what a lot of companies will do in these early stages is they'll talk about all the amazing stuff that they want to do, but really it's more about what they're actually going to do, what they actually will do. Rather, I mean, what Facebook has that no one else does is users. So essentially, you've got I think they've got nearly a billion users now or something. They've got some obscene amount of users, more than any other. I think the only thing that would have more users would be Google. That are pretty much and a significant majority are logging to that platform every day. So you've got lots of eyes on the screen, which means that for them to introduce something to do payments, I mean, adoption would be fairly high. However, I mean, let's see how realistic they can make it, because the biggest complication with Libra is obviously the backing and the way that they have that basket of different currencies and how they're actually going to manage that, I think is going to be the hard part. But look, I mean, I wouldn't be, I mean, don't get me wrong, they're a very technically competent company. But yet again, let's just wait and see what they come up with. Because, competence doesn't necessarily mean that they're going to be able to deliver a product that is going to be able to catch up with the current market. In the same way that Kodak was, the biggest photo producing company in the world, was massive in the 80s and 90s. And then, although they had probably the most competent people that were involved in the camera industry back then, they got absolutely trounced by digital, despite the fact that they were aware of it. And they did a whole bunch of different things to try to adapt, but it just didn't work. And so, just because you're the bleeding edge of what the current mainstream technology is, doesn't mean that you're going to be able to appropriately adapt your business for the next wave. And that's something that no matter, how amazingly innovative you think you are and how much of the lean startup methodology you apply to your business and blah, 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 the bigger you are, the harder it is, because you've got systems within systems that make things harder to adapt. But I mean, as I said, that more goes into talking about, are they going to be able to develop a solution that will actually suit the needs of the people they want to? And is it also going to be able to keep up with the rate of change that we believe cryptocurrency will inflict on the existing market? And that question is one that we just don't know yet. It'll be something we'll read about in a textbook in 10 years' time. Right. So, yeah, that's all I can say about that one.
Yep. Any thoughts on crypto use by terrorists?
It's a fairly well-beaten horse, that one. Like you pointed out, the transaction sizes are quite small. We all know that more drugs, more terrorism, more illicit activities are funded by the US dollar and fiat currencies over everything else. And there has been in the past 50 years, there's been nothing else that has taken that, has been unable to take that crown, including Bitcoin. I think that pro rata, Bitcoin, I think, is at like 3 or 5%. I can't remember exactly now what the stats are, but it is a higher percentage pro rata of money that's used illicitly. Now that's not only terrorism, that's everything that is considered illicit. That's what Bitcoin, that's sort of where Bitcoin sits, is it sort of a certain amount of their funding is used illicitly. But when you have a look at absolute values, as in total dollars spent, the amount of money spent illicitly using US dollars globally is greater than the entire value of Bitcoin. So I think that, the crown will probably never be taken by Bitcoin as far as the currency used illicitly. And I think that the people that are using it are just people who are making, it's a niche thing, not a trend. The people that are sort of, trying to do large international transfers with, money that isn't theirs, blah, blah, blah. I think that's obviously a very small percentage, and it's niche. It's not indicative of a trend, because there are, like I said, more people using, more money is spent on illicit activities using USD than the entire value of Bitcoin. So it's a tall order to sort of really put them in the same category. But it does make a good news story. And I think that's more what anyone who's writing about it, that's more what they're trying to do. They know that if they say Bitcoin illegal, people are going to click on it, like it, whatever it. People that hate Bitcoin, I think it's a total scam, are going to love it and share it and whatever. People who don't, people who love Bitcoin are going to get angry and make YouTube videos about it and talk about it and blah, blah, blah. So if your goal is to get your article read by as many people as possible, then, put up some shit like this and people will read it. It's not any more complicated than that, because if any lawmaker, if any regulator actually took any of this stuff seriously, then it wouldn't have made it past Silk Road. After Silk Road, it would have been done and dusted. It would have been over. There would have been no more industry, because that was pretty much the time when where there would have been the highest percentage of Bitcoin being used for illicit purposes.
That's true.
We're no longer at the point where that's the case anymore. And now you've got, sorry, Peter.
Yeah, they re-auctioned actually the confiscated funds as well, right? From
Yes.
so I mean, from
FBI.
I mean, why would you re-auction bitcoins that have been confiscated from illicit activities if you don't want it to exist anymore?
Exactly. So they still think that the FBI has a ridiculous amount of Bitcoin that they're trickling back in because they don't want to flood the market with all this stuff. That's another conspiracy theory for you. But there's been a lot of that. I've got to say that the biggest, I think, I mean, when you're reading crypto news, and I firmly believe this, is that I'd probably say that most people who got into Bitcoin early would be intelligent people. Now, I'm not saying that because they're intelligent they bought Bitcoin. I'd probably say it's because of their profession that they were introduced to it. So, computer science guys who are, coders, developers. I mean, all the early Bitcoin people were somehow involved in computer science, and were a bit nerdy. So these guys are smart guys. The biggest issue with an intelligent mind is that you try to find patterns in everything, and even when there isn't one. So that's why, for example, if you read a lot of news about crypto, or you have a look at any of the crypto streamers or anything like that, these guys are always going on about paranoid theories about, Goldman Sachs and JP Morgan and how they're trying to steal your Bitcoin and blah, 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 and big into this conspiracy theory stuff. Now, that's fairly common with intelligent people. Like people that believe in flat earth theory, a lot of them are actually quite intelligent. They're not idiots out in a hick farm in the middle of nowhere rubbing two sticks together. They're generally, professionals in one way or another. And that's unfortunately the curse of an intelligent mind, is you try to find, like I said, your pattern making machine is working overtime. And sometimes you'll look at patterns where no pattern exists. There's a great book that talks about that called Fooled by Randomness. It actually is a bit about, it's actually good for people who are interested in trading. But essentially the book talks about, the fact that sometimes we're just fooled by randomness. We see some things are random, and then you try to, you delve too heavily into them and you realize that there's nothing there. So I believe that that's sometimes the case with this stuff. And I think it's also the case with a lot of fringe crypto news, is that people bring out these crazy ideas about how the New World Order is trying to, take over Bitcoin or something crazy like that. And it's just, I just don't see it being there. Sorry, I'm waffling.
Yeah, no problem at all. No, but it's a very interesting subject or topic to discuss. And I think I think the good thing is actually to be open about it. You need to openly discuss this, and openly people need to understand, like they need to see both sides of it. So, I mean, like crypto has been used for illicit activities. It's known, in the past. But then at the same time, you've got a lot of counter arguments which suggest that it's just not a good means of value transfer for terrorist activity, right? So
you've got a
much transparent
permanent record
in the world.
Yeah, you've got a permanent record that is public, that anyone can access, that shows every transaction you've made on a certain wallet. Now, there are ways you can sort of launder wallets, and you can stick them through different services that will actually wash your crypto and transfer it out to different ways. But essentially, there's a record of the transaction, and that's why people, for a lot of illicit transactions, use cash, because there's no digital footprint of physical cash. I mean, there's a reason why Colombian drug lords have, or any drug lord, doesn't have to be Colombian. Any like drug lords, well, they'll have just these underground, pallets, pallets of cash hidden underground, because it's easier to. It's obviously not as easy to transport as Bitcoin, but any transaction done with that cash is completely black. No one knows, what you're doing with that money. So yeah, it's a bit of an interesting one. But yeah, I mean, these arguments are. I mean, like I said, I'm just going to go back to my original point that a lot of these articles that come out, in my opinion, I mean, it guarantees that people will write, so people will read the article that you've written. But then not only that, they'll get passionate about it, and they'll be like, yeah, you're right. That whole thing is a scam. What a bunch of idiots. on one side, and then there'll be the people that are pro Bitcoin who will just get out and go, oh, look at this crappy bloody, la la la, and then they'll post, but they'll still post about it. I mean, like, the amount of positive and negative articles about Bitcoin that are posted in different groups, both the positive and the negative get posted. You can guarantee that article would be read by both crypto haters and crypto lovers alike, and obviously viewed differently. The crypto haters would be like, yeah, that's right, it is all garbage. And then there'd be the crypto lovers who'd be like, oh my God, look at this idiot. They just don't know what they're talking about on the other side. But from the author's standpoint, that both of those opinions are irrelevant, because all you want to happen is you want as many people as possible to read your article.
Yeah, true.
So, yeah, if you understand it's just how the game works, really.
Yep. All right. Okay. So I think we've kind of touched on my points, but are you ready to share some Goldman Sachs with the community?
Yeah, we'll go through it. I'll try to run through this as quickly as we can. I just need to, I think you've got my thing over there. Yeah, there we go. So I was building slides for this earlier, and I looked at it and I was like, what's the point? Like, I mean, all I'll be doing is just summarizing points that are already summarized here. Like summarizing a PowerPoint presentation into another PowerPoint presentation just seemed counterintuitive. So I just we'll just run through it. Now, anyone who's had a look at this so far and read articles about it, I'm going to have my take on it, but there's different takes. I mean, in mine, I try to keep mine as down the line and unbiased as I can. But essentially, you've got to have a look at, what Goldman Sachs is, firstly, when you have a look at something like this. They're essentially a private investment bank for ultra high net worth individuals, doing, and they offer investment advice and have strategies and blah, 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 blah. So when you have a look at what they are and what they do, and corporate history aside and whatever, you have a look at what they are, then what they've written here makes complete sense. Whether people agree with it or not, this is not by any means, surprising information as a start. Because I've watched a number of things over the past few days about this people have come out and said, oh, it's showing that, that the Goldman Sachs are going to try to create their own, like JP Morgan are trying to create their own coin. They're trying to do that here as well, and blah, blah, blah. But I mean, I don't really buy into any of that. I mean, like, essentially when you're putting out these investor calls and you're doing these kind of things. I mean, I used to work in a very large broking firm in, not necessarily a Goldman Sachs of size, but it was the oldest in Australia. And so I know how a lot of these companies sort of work and the way that they think and the way that they even think about information when they put it out. I mean, you've got to be thinking about information that's going to keep your clients safe, regardless of what you think about, Goldman Sachs, corporate, what is it, like moral streak. But essentially, I mean, like, the way that you've got to think about it is that why these guys are putting it out. And I don't think it's some big conspiracy. I think that they're trying to give some genuine advice to the kind of customers that they are after, which is ultra HNW, even HNW, high net worth, and people with money to invest in that want to be at least reasonably secure. So we'll run through it quickly. I'm not defending them by any means, but I think that you've just got to take everything in this space with a bit of a grain of salt, which is sort of what I was talking about earlier, is that you'll have some absolute Bitcoin nut jobs who, believe that we should just be rid of cash and we should all move digital. It's going to be the best thing ever. I think the people that are saying that kind of stuff don't actually understand what that means or what the transition would, like how that transition would work. And therefore their opinion should be discounted, as harsh as that sounds, because I mean, it's not a reasonable opinion. But then the people that think that this is an asset that's only used for dealing drugs, and it's just a complete furphy, the same sort of thing. I mean, you've got to sort of say, well, they obviously haven't done enough research into it to really understand what it's about, so their opinion can be discounted. If someone was, but one guy that I do during the bubble, like I say, one guy that was not given enough credit was Jordan Belfort. He had some good opinions. But we won't get into that now. So pretty much what they're talking about here is obviously, what's been happening in the years so far. This is the timeline of COVID. Anyone who has watched any of my talks might sort of be familiar with this style of chart. this is sort of all Corona stuff. We don't need to really stress out about too much. Lifting restrictions in the States.
It comes up a little bit small on the screen, so just in case there's anything that's really jumps out, you might need to.
I'll point it out. At the moment, this is just sort of Corona stuff, which we don't need to stress out about too much. This is looking at data in regards to growth in the States, and they're saying that the rate of growth has bottomed. So it means that although we've had a retraction over the past little while, Goldman Sachs believes that that the mobility of the mobility data has improved since April. So it means that although growth is slower than it was, this is a chart of growth. I think that's US mortgage applications, total credit card spending, and mobility data. You can see that although we're looking at a 35% retraction, and it's still in the negative, the degree in which it's negative is decreasing. So we're seeing less negative activity here. So although credit card spending is from the start of the year is down, it's not down as much as it was, say, in the end of March. So at the end of March, credit card spending was down 40%. Now it's only down 10, 15% odd, depending on what you're looking at. And the same thing with mortgage applications. Although we're down from the start of the year with mortgage applications, you can see that rising to a state where it's actually back up to where it was. Now, the Dow Jones, unfortunately, hasn't done anywhere near that. I think it's still down 15% for the year, but we won't get caught up in that right now. Yet again, similar sort of stuff saying that at the moment, what we're seeing is that, Corona did have that really, really sharp downturn, but we're in a bit of recovery. And this is what the actual data shows us. So this is actual data, not somebody's opinion. And that is sometimes the good thing about data is you get lost. We get lost. Oh, Jesus. We get lost in our own worldview. And then we don't actually ever have a look at the actual data. And so, however, unemployment is a big concern here, where we're seeing that job losses are going up. Now, yet again, the rate of job losses, the increase in job losses is decreasing. So we had, for the week ending end of March, early April was obviously we're seeing, 6,000, so just under 7,000 job losses per week. Now we're only seeing 2,500. So we're still seeing more and more job losses, but at the rate at which people are becoming jobless in the United States is decreasing. And that could be a function of that obviously a lot of people lost their jobs doing, so I think that was in the thousands, by the way. So that was in the thousands. It wasn't 6,000 people losing their jobs. It was 6 million.
So 6 million?
I think so. Yeah, 6 million. If that's in thousands, that'd be 6 million. So 12 million in 2 weeks, not too bad. So I thought that looked a bit low, but yeah, that was in the thousands. So, I mean, one could argue that this is people who say didn't work office jobs. These are people who were involved in bars, restaurants, food service, something like that. Something that could not adapt to a world where people weren't going out. People who worked in cinemas, in malls, in retail, all these things that got shut down. I mean, they're people that lose their jobs like that. And that's what we're seeing there. But then obviously, people who work at, people work at Facebook, at Goldman Sachs. If you work in an office, even somewhere like New York, which was one of the hardest hit parts of Corona, I mean, most of the people who would be working in an office would not be overly affected by it because the majority of employers would have just been like work from home. And so they wouldn't have lost their jobs. So this could either be a case of not necessarily a traction of the economy, just would have been circumstantial. But it's one of those things we don't know. I mean, my personal view is that things are going to get worse before they get better. Even as the virus statistics improve, we're still going to be in a situation where, we've caught the cold, but now we've still got to experience the symptoms, and we haven't really even started to experience them yet. Most temporary layoffs in the US so far, as you can see in this chart, it's saying that the majority of jobs lost in April were temporary jobs and not permanent. But I think the more permanent job, and this is because of people who work in, like I said, work in cafes, work in restaurants, things like that. Whereas people in offices still maintain their jobs. Now, the biggest issue with an economic contraction is that those businesses that say, their staff still have the ability to work from home, they will be earning less money. Less money means less, higher pressure on a wage bill. So I expect that in the future, this bar may not be as big, but the orange portion will be. And that's how things work. They're sort of saying here that they're not seeing a new depression, because obviously the unemployment rate, they're seeing it. What was it? The unemployment rate has skyrocketed up 25% over a period. This is 1929 down here up to 1933, and then we're having a look at the GDP and the price. An 86% loss in the S&P 500 from 1930 down to 1932, and they're saying that basically the downside figures that we experienced during. Actually, I can zoom in here. What am I doing? I'm silly. The figures that we experienced during the Great Depression as a percentage were not as severe as the figures that we're seeing now. Now, that could also be that if you have a look at the S&P, that we're in this period here where the S&P dropped, if we're saying that's 86% down, we're talking about 30% down. So we could just be here, is my only concern, is that we're at this point here where we've had our dip down when Corona started and we had a recovery and then we just keep drifting down. But, time will tell. This is the financial fiscal responsiveness, government deficits and things. I mean, I don't want to get too bogged down in all this stuff. The one thing is debt. Federal debt is going to be obviously increased significantly as a percentage of GDP. Under the current policy, they're going to be at 150% of their GDP is going to be in debt, which means that if the United States government didn't spend any money, it would take them for 18 months. That's how long it would take them to pay back that debt. 18 months of all their money going out the door. Don't worry about this stuff. Monetary easing. This is all the stuff about inflation. Now, Goldman Sachs is saying that the inflation rates aren't really being a big deal. And this is sort of where we're having a look at, this is actual inflation. This is the consumer price index. So this is the rate at which, prices are increasing or decreasing. And they're sort of saying that basic inflation is actually going down. And they're saying here that the expected inflation, which is by professional forecasters, is that we're going to basically, we're basically going to, inflation is only slightly higher than where we thought we'd be from 5 years ago. So sort of saying that, despite the fact that Corona is happening, that they haven't seen any real material increases in inflation. Now, I'd also say that stuff like that takes a bit of time to bake out. It's not something like you have a downward quarter and then immediately get the data in to talk about inflation. But at the moment, it's not something that we're really fussed about. Now, this is a really interesting part about this. I've skipped over a lot of this stuff about the US dollar strength and whatever, because we could just be here. We're only halfway through this document. I don't want to be here all night. So the interesting thing here is they actually talk about how the S&P 500 is actually better than gold as an investment asset. I don't know where they're getting that data. I know where they're getting that data because it's absolutely ridiculous. What I'll do is I'm actually going to bring up the chart in 1 second. I've actually got it over here on another window. And this is when you can see silly things that people do maybe I haven't got it up here. I'm bringing it up. Hold on. What they've essentially done is S&P 500. Bring this over into Trading View and I'll show you. So the way that they've calculated this, and this is pretty bad, is saying that from the 20th of April until today, the S&P's outperformed gold, right? Yeah, sounds good. The 20th of April is like we're there. that's the 20th of April here. They're saying that it's outperformed gold. So it's gone from, let's say, 2,800 to, to 3,000. So, whatever that is, 2,800 to 3,000, 15% or something. No, it wouldn't be that much. God, my math is terrible. Whatever that is. Anyway, now if I have a look at gold over the same time period, gold isn't going to look as attractive. So what I'll do is I'll get an overlay here. How did I do that? Yeah. GC. We'll just get gold futures, spot contract. Now, it hasn't performed as well, right? You can see here that we're slightly down. Gold is down 3%, or gold is only up 3%. S&P 500 is up, 4.5%. Now, that's essentially playing silly things with the figures. So if I go back to the 20th of April, which is about there, that's what they're talking about. Even if I move it over a bit more, 6%, gold is quite flat from the 20th of April. But if I actually pull this back, so what you're looking at here is they're comparing the percentage gains of the S&P versus gold. Gold is the red line. Mm-hmm. So if I go to the start of the year, from the start of the year, I'll widen this out a bit so it's a bit more, oops, the other way, sorry. I'll widen this out so it makes a bit more sense. But essentially from the start of the year, what you're seeing here is that gold is up 14%, the S&P 500 is down 6.9%. What Goldman are doing in this analysis is they're taking the price changes of both since the 20th of April, which bar? I'm just going to pull the bar across and I'll show you. 20th of April. So if I move this back here, there. So what they've essentially done is they've just changed the framing. They've said what's happened before that is irrelevant. If you bought the S&P 500 on the 20th of April, which is right there, you would be up 7.83%. There we go. If you bought gold, you would be up only 2%. And that's when they're getting to this statement here, S&P trumps gold, which is just absolutely ridiculous. Oh, since April 5, sorry. I'll move it back a bit. I'll be fair to them. April 5. There you go. Looks a bit better now, doesn't it? But then if we have a look at it from the start of the year or any other point in history before then, gold is still beating it the whole way through historically. It's pretty silly to say that from the 4th of April, which is all the way down here, the first run up, right? The 4th is there. Taking it from here and going, it's been a pretty good bull run in there, whereas gold from that period has been fairly flat. To sort of have it as a comparison, I think is fairly silly. So this is a bit of a leading point. I don't know what they're doing here. I don't know why they said it because it's absolutely stupid. But essentially they're saying here that the S&P has outperformed gold. Gold is above its long-term inflated adjusted averages. However, my argument against that would say we're not necessarily in a standard time. Like you can't really say that we're in a normal market right now. Yet again, they've sort of talked about, this is where they've talked about equities have consistently outperformed inflation while gold has not. This is, where is it? Commodities have gone down. Gold is up around here. US equity, they're saying, has absolutely smashed it. T-bills is slightly below gold. What's this below? Intermediate treasuries or real estate prices. So they're sort of saying that, well, although gold is sort of, going okay now, you shouldn't be putting all your money into gold. Now, one could ask, why would they be pushing this out to their investors and why would they be pushing this out to the broader public? One argument could be because they don't want people to go out and sell all their stock and go and buy gold, because that would be pretty horrendous for the share prices. But I don't understand. This is the part of the article that actually gets me more annoyed, because this stuff is so subjective. They're trying to back up arguments here with data, which, don't get me wrong, they're not lying about the data, but they're just not factoring in all the different elements that go into where we're sitting right now. I mean, you know, when you've got massive job losses, you've got massive changes in the way that society operates. And then not only that, you've also got the emotive side of a society. I mean, like, holy hell, I mean, even here in Australia, cafes are open again, but people aren't going to them. I mean, I have now gotten out of the habit of getting up and having breakfast at a cafe on the weekend. I just still have breakfast at home because that's now the 30-day habit that I'm in, because that's what I've been doing for the last 2 months. And I don't think that I'm alone in that. I mean, anecdotal, yes, but I think that there are greater economic problems that we're going to face even after the corona thing is over, because whether we like it or not, a lot has changed. And as we all know, building habits takes 30 days. And then it becomes habit. And so, I mean, there's probably a lot of good habits that people are making at home. There's probably a lot of really bad ones as well. But at the moment, I mean, I don't see, you know, as I said, you know, they're saying as a percentage of time how much, you know, this asset overperforms. They're saying that generally most of the time equities outperform, gold doesn't, blah, blah, blah. I mean, probably historically true. However,
there was a slide in there about Bitcoin performance and basically Goldman Sachs' recommendation on Bitcoin.
Yes, further down. We're going to get below this. Basically, this whole thing is just them slamming gold. You know, basically trying to get people to not buy gold. And now here we come to the Bitcoin part. Now, you know, this is sort of where my preamble was leading before when we were having our chat before we got onto these slides, is that a lot of people look at this as like a, you know, or Goldman are preparing to do the similar stuff to what JP Morgan did. And I got to say that I don't think, I mean, you know, people think that maybe JP Morgan did the whole, you know, shit panning crypto so then they could buy a bunch and then, you know, then decide to release their own coin. And then, you know, Facebook did the same thing where they were banning, you know, any ads about crypto, and then they turned around and released their own. I mean, maybe there could have been a bit of that going on, but I mean, as someone who lived through that part of the industry, or that time in the industry when, you know, they banned all the ads, I mean, 90% of the ads people were getting were invest in this XYZ ICO that was a complete scam. I mean, if you want the real reason why they got rid of ads, it's because of that. And I remember it. I was like, that's good. Less people are going to get ripped off by dodgy ICOs. At the time, I mean, Facebook was just flooded with buy XYZ piece of shit ICO. You'll make 8,000%, blah, 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 blah. Why it's going to be worth $1 trillion. I mean, you'd even go to, and Facebook was the worst of the worst, but you'd even go to conferences. I remember I went to a conference where a company was trying to raise $1.6 billion for recycling plants. And it's like $1.6 billion. It's like, what have you got now? Like, what business? Oh, we haven't got a business now, but we're going to start from scratch with $1.6 billion. We just want to go out and capture the whole market. It's like, what? That's absolutely ridiculous. And their valuation.
Sorry? I mean, Telegram also raised into the billions as well, right? But now they're actually in the process of returning funds, right?
Yeah, they're funding. And that's another complicated story. We can get into it another time. But essentially, but I mean, this one company, and you'd ask them, I mean, like they said, oh, if you buy now, our projected token price on listing is going to be $1. And they were selling it at 10 cents. And I was like, well, how do you justify that? Oh, because we're going to have all these plants. And I said, yeah, but you know, how does that affect the token? And they had no idea how to answer that, because they were just so used to dealing with greedy people who wanted to buy at 10 cents now and then sell it $1 in 6 months' time. That understanding that's how money works. So, I mean, to stop that kind of behavior, I've got no problems with Facebook blocking ads. And then when all that dies down, and then when there's SEC regulation and there's no more dodgy ICOs, Facebook coming out and going, hey, you know, actually this technology is not too bad. We've got some ideas on how we can use it. We're going to launch Libra. I mean, that for me is a more plausible narrative than big evil Facebook banned Facebook ads on crypto so that they could stifle the crypto industry so they could then come out and release their own token. I mean, like, if you're looking at the type of ads people were getting at the time, and I also got to say that probably Facebook was doing it to eliminate any risk of them getting sued by enabling these companies to rip people off, and Facebook were complicit because they were getting paid to allow these companies, obviously by running ads, to scam people. projects that were very obviously scammy. I think that's a far more plausible story. And the same thing with JP Morgan with their coin. I mean, any investment bank looks for ways to make money. And if they reckon they can make money out of releasing their own coin and enabling their users to do whatever, then, you know, more power to them. But I honestly, I don't know. I don't think that anything in this is particularly surprising. If you have a look at the institution writing it, and if you have a look at who their customer base is, this stuff is fairly standard. Okay, so what they've said here is Bitcoin a currency or an asset class? Sovereign currencies have three main criteria. They use as a medium of exchange. And this is basically like, you know, you use them to buy coffee, and then you get paid by making websites in Bitcoin, blah, 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 blah. The same way that, you know, Australian dollars or Filipino pesos or Malaysian ringgit, Singaporean dollars, Indonesian rupiah, all these currencies, that's how they work as a means of exchange. They serve as a use of account. So you can measure an asset based on its value. So here it says, like, you know, barrel oil is worth $33. They are a store of value. That you know, even with inflation, you can have an idea about what your asset is going to be, with what your $100,000 in the bank is going to be worth in 3 years' time. Now, although it may be worth 6% less than what it's worth now, you still know it's actually quite predictable. Now, the reason why they're saying that Bitcoin does not meet this, the classification as a currency, is because, I mean, as a medium exchange, adoption isn't there yet. I did talk about this in my adoption talk. And then we talked about it last week. We talked about the Bitcoin halving. They serve as a unit account. I mean, Bitcoin is way too volatile. The only thing that Bitcoin serves as a unit of account against is other cryptocurrencies. As sometimes it's the only trading pair that's available. However, even then, the volatility of Bitcoin then makes it difficult. But I think that this also needs to be taken with a grain of salt, because yet again, Bitcoin is valued against US dollar. And then the whole idea of the Bitcoin space is to say that, you know, fiat currency is bullshit. We need to get away from it. So, I mean, this could be taken away as being this one line could be taken away as being a negative for Bitcoin. You could say that the volatility of Bitcoin has less of a function to do with Bitcoin and more of a function to do with the US dollar. I mean, that isn't the reality, but I mean, you know, if you start to change that thinking about, like, you know, okay, well, you know, although it is trading against the US dollar, the US dollar goes up and down against Bitcoin or whatever, and it is quite volatile. I mean, it goes up against the US dollar significant amounts, but I mean, essentially, if you have a look at it, it is a function of you know, electricity spent to keep the network alive. You know, I mean, that kind of, if there was if that was all it was based on, it would actually be quite stable. As in, if miners set the market price, basically saying that, well, my mining cost was this, my cost of doing this was this, I'm going to sell my Bitcoin for this. And then they were the main market makers, were the guys who were, and that was done efficiently without any manipulation, then you could say that Bitcoin would actually stabilize if the miners set the prices.
So just to completely generalize here, is Goldman Sachs saying that Bitcoin is neither a currency nor an asset class?
Yes, exactly.
Okay.
Because they're basically saying that Bitcoin has none of these. They're a store of value. Yet again, because of the volatility of Bitcoin, it's really hard to keep it as a store of value. I mean, like, you know, less than a year ago, Bitcoin was down at, let's have a look. Let's get real about this. BTC.
I guess so. One of the burning questions would be, so what does this actually mean for the general perception of Bitcoin? You know, what are people going to think now that Goldman Sachs has given this perspective on Bitcoin as a currency?
Yet again, I mean, I don't think this is going to change this is not going to change the mind of anyone that's in crypto, because in the same way that Trump brought out the whole fake news thing, where it's like, I'm not going to listen to you, you're fake news, and just delegitimize certain news sources to say that they just were idiots and they didn't know what they're talking about. The crypto industry has done the exact same thing to Goldman Sachs and JP Morgan. Anything they put out can be immediately discounted because they're they don't believe in it, they don't get it, or they're trying to steal your crypto, they're trying to drop FUD to drop the price so they can take all the Bitcoin off the weak hands, blah blah blah. It's instantly discounted by Bitcoin evangelists. This stuff is just instantly discounted. However, in the same breath, they'll all reference it. Like, everyone will reference this as something, or they'll reference it in that although the news is bad, people are talking about it. Like, Bitcoin finally made it to a Goldman Sachs client call. You know what I mean? Like, oh, we got 3 pages this time. Great. But all this information is true, by the way. I mean, I'm not saying this is all the information that you need to make a decision on whether to buy, sell, or hold Bitcoin. But essentially, I mean, this information is not untrue. I'd probably say there's more information that needs to go into the pot to have a complete source. But I mean, like I said, from the perspective of Goldman Sachs, all this information here about the sovereign currency is true, and Bitcoin, and the way that they interpret Bitcoin and their understanding of Bitcoin is this is all true. You can't discount it. If you're like, okay, well, if I look at it from their point of view, this is actually correct. And then I've already talked about the reasons why there could be a different point of view there.
Well, the funny thing is also, last week, the big news actually for the crypto industry was that Paul Tudor Jones was getting into Bitcoin, right? So he's one of those American hedge fund billionaires, and that was huge, right? For him to be able to invest into Bitcoin, he must have seen value, right? Either as an asset class or as a currency.
They're saying that I remember a quote by an Australian billionaire, or one of the first Australian billionaires, and he said, after you make your first 10 million, preservation becomes a bigger problem. He said, I didn't care about foreign exchange or the value of the Australian dollar until I made my first 10 million, and then it becomes a problem. And that goes into the diversification mix. I would argue that someone like a billionaire with significant amounts of money, and obviously it depends on how much he's sunk into Bitcoin, it would be a hedge less than an investment. And it's that thing that's sort of like, okay, we talk about it, right? You now get $10 million, Peter, on top of the existing millions that no doubt already have. And then so you get $10 million, right? Or anyone, imagine you get $10 million, and you're like, oh, well, what are you going to do with that $10 million? I'm going to buy a house, I'm going to go on holidays, blah, blah, blah. But then at that level of money, you start to then think about, okay, well, what happens if something bad happens in my case in the Australian economy? What will happen to the value of my $10 million? Or if there's another mining boom and people need Australian dollars to buy Australian commodities, the value of my $10 million in Australia will actually go up in a US dollar term. And when I want to take one of my 3-month holidays, across the world, that is going to affect that. The underlying value of my Australian dollars is going to affect that. And sometimes it can be, upwards of 30 to 40%. I mean, in the case of the Australian dollar, there was a time in 2000 and when was it? It would have been 2012. When I was a stockbroker, the Australian dollar hit 110 US dollars. So for $1 Australian, I would have got $1.10 US. And now we're trading at 66 cents. And that's, say, less than 10 years later. That's a nice, and it has been under 60. So we're talking a 40% swing, 50%, 50% swing there in the value of your asset. Now, if you're only operating, in your home country and you've got a 9-to-5 job and you're doing your thing, chances are you never think about this stuff. But once you then start to go up that level, when you start to cross that $10 million in disposable assets level, this stuff really matters, and it matters even more so when you're a billionaire, when you got lots and lots of money. So yes, I haven't sort of interviewed the guy or sort of had a one-to-one chat on him, with him rather. But I would say that, and he might make a big show about it, but I'd probably say that, he wouldn't be doing it just from I think Bitcoin's going to go up and I'm going to invest in it. I mean, the guy's a billionaire, what does he give a shit? Unless he's buying a significant amount, which he didn't, because in his terms, the significant amount would be 10% of his assets. So let's call it $100 million. I haven't seen $100 million of the buy liquidity come in over the past however long. So an investment of $100,000 or $1 million from a billionaire is literally nothing. And I would consider it more of a hedge than an investment, because he wouldn't care if Bitcoin, let's say Bitcoin doubles. He goes from being worth $1 billion to $1 billion and 1 million. Great. Happy days.
I remember actually he did say it was a very small fraction of his portfolio, but I think for the crypto industry in general, it was a very positive sign to see people from traditional investment houses, get into cryptocurrencies, especially Bitcoin, right, to give it value, as even if it
is validation. It is validation for a lot of people. But I would not be. But I'd be taking that news again like this with a grain of salt. For some reason, that we try to make the mundane sound exciting. A billionaire saying, "I'm going to hedge some of my money into Bitcoin because of inflationary reasons, because I think that Bitcoin's going to outperform the US dollar, so I'm going to put a bit of money in the side there." Whatever. Happy days. What would be really interesting is if someone who was excessively wealthy or some crazy investor or whatever put enough money in that if they lost it, it would affect their lifestyle. Balls to the wall investment that if I lose this, I got to sell I'm down to one mansion, man. I'm slumming it. Something that would affect their lifestyle, something that actually involves risk of something. Once you've hit $1 billion, there's not really much risk in, you're not really feeling risk putting $1 million into a startup or something. You're just like, whatever. And I think that, so it'd have to be something to get me excited. It'd have to be something that would involve risk on the part of the investor. Because traditionally in this space, the kind of people, if you're a grassroots Bitcoin investor, if you put away half your salary into Bitcoin 1 month, that will affect your lifestyle for that month, because you're not going to have as much money for other things. People who lost tens of thousands of dollars during the crypto boom because they're putting all their money into shit coins, their lifestyles were inevitably affected. They weren't able to go on holidays that year. They weren't able to, whatever people do with their money, I don't know.
So I've been a terrible moderator, and I've allowed us to go over the 1 hour allotted period.
Luckily, there's only a few more slides left, so I'll be quite quick.
Take us through the remainder of Goldman Sachs, and give us
send me a complaint email. I'll be sure to read it. So yet again, cryptocurrencies do not generate cash like bonds or shares, for that matter. They do not generate any earnings through exposure to global economic growth. I would just say that you would stop it at do not generate any earnings. That is one of the biggest issues and my biggest critique of most of the Bitcoin. Sorry, not Bitcoin, but the cryptocurrency industry. Do not provide consistent diversification benefits given their unstable correlations, saying that for someone who's doing financial modeling, they're unable to say, when gold goes up, Bitcoin goes down, or, when gold goes up, Bitcoin goes up 50%. So it's hard to model. So yet again, from an analyst point of view, I would say that Bitcoin would be an annoying asset. I can completely understand that. Do not dampen volatility, given its historical volatility of 76%. On March 12, 2020, the price of Bitcoin fell 37% in 1 day. They do not show evidence of hedging inflation. We believe that a security whose appreciation is primarily dependent on whether someone else is willing to pay the price for it is not suitable investment for our clients. Yet again, a very, very fair point. And also we believe that while hedge funds may find them appealing because they're high volatility, that allure does not constitute a viable investment rationale. So yet again, if you're trading it, it's great. You're trading the ups and downs, it's fantastic. But if you're buying and holding this asset for the long term, they're sort of saying there's better assets to hold. Now, yet again, if I was Goldman Sachs and I was and I had a look at who my clients were, and I'd probably say that most of their clients would be, I'd probably say the bell curve would skew more to the plus 40, plus 50-year-olds, people with, money that they've made over their lives and they're retiring or whatever. I would not be recommending them to buy Bitcoin. I wouldn't tell my parents to buy Bitcoin, for example. I just wouldn't. Just be like, no, it's just too much. You don't need it. And I do not think that any of the statements they've made here are unreasonable at all. I don't know why people are freaking out about this thing. Because that all this here is actually entirely true. It's not misleading. It's not, perpetuating an agenda. It's just like, yep, that's all fair enough. From someone who works, I know I've worked a long time in financial services, and coming out of it, this is fine. No dramas. They've received enormous attention, so they're saying that a lot of the rises are basically due to basically the marketing coming into it, and that they're not a scarce resource because there's millions of cryptos all over the place. This here, we've already covered this. As we know, it's all garbage. And yet again, this is also quite true. Cryptocurrency infrastructure is still young and susceptible to hacking or inadvertent loss. Yet again, I'm not trying to do a plug right now, but yet again, the main reason why we came out for the idea of doing these workshops was because we said, well, people who get started early are the most susceptible to all this stuff. So we'll try to create a product that will cater to those people, because this is still true. They're saying the crypto ups and down was absolutely insane compared to others. And then this is their summary, which is not only about crypto. So the information here you've got to understand is that who it's catered for. It's catered mostly for people who are in there, saving for their retirement, people who are after earnings. So, for example, if you're a retiree, if you're an investment advisor and advising a retiree, you're going to be telling them to earning asset. You want to be putting them into assets that are going to be generating income, because they obviously, once they're retired, they're going to be earning income anymore. So that's why you like shares with nice dividends. You'll be putting them into banks, and in Australia it would be banks, or something's going to be paying like a dividend of plus 5%, with franking credits, so you don't pay tax on it. There's all these different strategies, and an asset like this that can't be modeled, has historical volatility, and has an uncertain future is not going to be suitable to that type of client. And so, I'm not saying that anything that, I'm not saying that I would say that they're not giving the full picture of the asset here, but I'd probably say for the kind of clients that they've written this article for, that is irrelevant. And I don't think that if you're 20, if you're under 30 or under 40, you believe that cryptocurrency will change the world in some way, shape, or form and change the monetary system. This article isn't this particular presentation, like this Goldman Sachs presentation, isn't for you. And take out the reality from it, take the reality that is displayed in this and say, okay, here are the risks of owning cryptocurrency. I believe in the dream. So obviously my dream of where crypto is going to be is going to supersede these facts. That's fine. But also understand that the article is not written for you. In the same way that, someone who wanted Hillary Clinton to be president would not really be partial to a pro Donald Trump article, even if it was factual. They'll just see Donald Trump at the top and be like, what a knob, and they won't read it. And the same vice versa. If you had a Republican hardliner with a MAGA hat, and then there was something about the Clinton Foundation doing good, they're still going to spit on the article and say, oh my God, they probably, although they might have done one good thing, they probably scammed out. Actually, that'd probably be true. But look, it's like, you're going to get that kind of emotive thing, and you've got to understand is this article, this is a pro Hillary Clinton article written for and then you've got a whole bunch of Trump supporters wanting to read it and pick it apart. But the thing is that the information contained, if you're a pro Hillary person, it makes sense. And I'm not saying it's factually incorrect. And of course, someone who believes in Trump and hates Hillary isn't going to want any part of it. So as a summary, basically, if you haven't read it and you got bored and tuned just back in right now, the article basically lists out quite, historically accurate data about the cryptocurrency and Bitcoin market. But however, the information was more suited to Goldman Sachs clients, which would be HNW, retirees, or people looking to save for retirement, things like that. And I think the information was fairly accurate. However, obviously it didn't contain everything that there is to be told about the cryptocurrency and Bitcoin story. and therefore should be taken with a bit of a grain of salt if you're obviously fairly active and you know what's happening in this space.
It's pretty fair, very fair. It's a nice analysis, Luke. But by the way, big question: is that report actually public? Is that report public? Is it public? Is it available publicly right now?
Yeah, you can get it from their website. If you actually, I actually got it from CoinDesk. If you go to CoinDesk and then their main article of the day links to it. It's actually like you can even get it on their website. It's their most because just remember it's not a cryptocurrency focused thing. Really what they're doing is they're saying they're understanding that there is a recent rise in interest in cryptocurrency, and they're basically saying to their clients, look, we still don't think it's a good time to get in. And I think that if you have a look at who their customers are, if they're being risk averse, and they don't want their customers to unnecessarily lose money, I mean that is fairly good advice to their customers. I don't know. I mean, like, I'm on a plan to still accumulate Bitcoin. However, would I recommend other people do that? Would I recommend other people doing the same thing as me right now? Probably not. And I think that when your job is giving financial advice, you've got to be really careful about what you tell people to buy and sell. And I think that if I was in their shoes, I mean, the article that I would have written would have been fairly similar. Because the one thing Goldman Sachs doesn't want to do is go, we're opening a cryptocurrency trading desk, give us all your money, let's go. And I know they have started all that kind of stuff. But if they're, I mean, at the end of the day, where the market sits right now, the uncertainty, if I was a financial advisor, there is more to lose by recommending people buy cryptocurrencies right now than there is for them to potentially gain. Their big gain for them is going to be getting their customers into really, really traded down equities, which is what they're trying to do there. Basically, if you want to make money out of people right now, which is what Goldman Sachs still, that's what they do. It is far easier to convince your customers to buy deflated stocks saying, well, it's actually not that bad. Like, the economic downturn from Corona, we reckon it's over. So right now you're getting stocks at bargain bottom prices, man. Just buy 50. Put another 50K in, bro. It'll be fine. That is the pitch that they'd be giving their customers. You've got to get this stuff now. It's not going to be lower.
Right, Luke, let me wrap this one up for this week.
Yeah, sorry.
That was great. No, that's some great insights there, and especially because you're from the industry, right? So it's always good to get the insights from someone who's actually been in that industry, interpreting basically how to understand this, and not seeing it as just like pure, what we call FUD in the industry, right? In crypto, where media tends to kind of overhype a lot of news, and it creates very strong reactions. But anyway, Luke, where can people find you? Can you share
Fortifex,
social links?
Fortifex.com. Social links. I mean, we are starting a new YouTube channel, but we'll worry about that next week. I'm not worried about that right now. I've got to put the video up before I've got to put my first couple of videos up before I start spruiking that one. So there'll be some fun content to view next week. Awesome.
Sounds great. And then if you want to follow us, obviously BlockchainSpace PH on Facebook, and on Twitter, we're on blockchain_SPC. All right. Thank you very much, Luke. Have a great Saturday evening.
Do my best. Thanks, guys.
Take care.